Today, we are diving into some major developments in the stock market. US stocks have taken a significant hit, and the Nasdaq Composite has officially entered correction territory. We are going to break down what this means, the latest jobs report, and what could be coming next for the economy. So, let's get started. First up, let's talk about the overall market. US stocks have experienced a sharp decline for the second straight session. The Nasdaq Composite, one of the key indexes, has now entered correction territory. For those who might not know, a correction is typically defined as a decline of 10% or more from a recent peak. This indicates a significant shift in market sentiment and could signal more volatility ahead. The big catalyst for this market movement is the latest jobs report from the Labor Department. In July, nonfarm payrolls increased by just 114,000 jobs, falling well short of the 175,000 jobs forecasted by economists. This is also below the 200,000 jobs needed to keep up with population growth. To make matters worse, the unemployment rate surged to 4.3%, the highest it's been in nearly 3 years. This data has raised concerns that the economy is slowing down faster than anticipated. With this backdrop, all eyes are now on the Federal Reserve. Earlier this week, the Fed decided to keep interest rates steady, but the weak jobs report has significantly altered market expectations. According to the CME's FedWatch tool, there's now a 69.5% chance of a 50 basis point rate cut at the Fed's September meeting, up from just 22% in the prior session. Lamar Willer, a portfolio manager at Willer & Co., noted that we seem to have entered a rational world where bad economic news is perceived as bad, rather than as good. The big question now is, did the Fed wait too long to cut rates? Another important point to consider is the SAM rule, a recession indicator triggered by the weak jobs report. This rule, named after economist Claudia SAM, is seen by many as a historically accurate predictor of recessions. It suggests that we are now at a higher risk of entering a recession. This adds another layer of concern for investors and policymakers alike. Let's take a closer look at how the stock market has reacted. The Dow Jones Industrial Average dropped 610.71 points, or 1.51%, to 39,737.26. The S&P 500 fell 100.12 points, or 1.84%, to 5,346.56, and the Nasdaq Composite lost 417.98 points, or 2.43%, to 16,776.16. Adding to the downward pressure were significant drops in major companies like Amazon, which fell 8.79%, and Intel, which plunged 26.06% following their quarterly results and disappointing forecasts. These declines have pushed the Nasdaq Composite more than 10% below its July closing high, confirming the correction. Among the sectors, we saw varied performance. Defensive sectors like consumer staples, utilities, and real estate managed to advance, while the consumer discretionary sector led the declines, heavily impacted by Amazon's performance. This sector saw its biggest two-day drop since June 2022. The CBOE Volatility Index, often referred to as Wall Street's fear gauge, breached its long-term average level of 20 points, reaching 29.66, its highest mark since March 2023, before closing at 23.39. Despite the sell-off, some market participants viewed this as a buying opportunity. UBS strategist Jonathan Golub noted that market returns are typically highest when the VIX is elevated, suggesting a near-term buying opportunity. Looking at longer-term trends, the S&P 500 posted 62 new 52-week highs and 15 new lows, while the Nasdaq Composite recorded 34 new highs and 297 new lows. Trading volume on US exchanges was 14.75 billion shares, compared to the 11.97 billion average over the last 20 trading days. This heightened activity indicates significant market interest and potential volatility ahead. To wrap things up, it's clear that the stock market is facing some significant challenges, with the Nasdaq Composite entering correction territory and recession fears mounting. We'll be keeping a close eye on how these developments unfold, especially with the Federal Reserve's next moves. Thanks for watching, and don't forget to like, subscribe, and leave your thoughts in the comments below. Stay tuned for more updates.